This is Retirement Keys with Anthony Congemi from Crescent City Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Anthony provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Retirement Keys with your host, Anthony Congemi.
Welcome to Retirement Keys. I'm your host, Michael Fight with Crescent City Retirement Group, and I am joined by my co-host, Tony Shore.
All right. Well, Michael, great to be here. I think this is going to be a great show. I'm excited about this one. And I know you have a great topic planned for us. I know our listeners are used to hearing Anthony. You've done a show or two with us before, but you're hosting the show today. And I know you've been working with Anthony for a while now, and you're part of the team there. What is it you do there at Crescent City?
So what I do, Tony, is I am an investment advisor representative, the same as Anthony. So he and I have the exact same credentials, same licensing, but I'm learning so much under his stewardship.
Yeah, he's a great teacher, and he's been doing this a long time, hasn't he?
He has. He's been doing this for over 20 years.
Wow. He must have started when he was 10. He doesn't look a day
he
over 40.
He looks young, but he's going to be 56 this year in December.
I got him beat by a year. So, yeah, I'm a year older than Anthony, and he looks about 10 years younger than me. So I don't know. It must be clean living, living right?
Sure, something like that. It's probably just his genes. He's Italian, you know.
That's true. That is true. Well, Michael, how have you been? Are you keeping busy?
I am definitely keeping busy, Tony. There is not a day where we don't stay pretty busy here, which is great. We're either meeting clients, meeting new potential clients, or servicing those clients in some way.
Yeah, I know you're really busy, and this is a busier time of year. I mean, October, they say, is one of the busiest months for financial planners, financial advisors, and financial services professionals of all types. And it is Financial Planning Month. I heard that it's officially Financial Planning Month, October. So this is going to be a great show today. What topic do you have lined up for us?
So I would like to talk about a year-end tax prep.
Okay, so year-end tax planning is what we're talking about.
Yes.
And is this something that's important to think about this time of year? I mean, a lot of people don't start thinking about their taxes until after the first of the year when they get that, their W-2s and things like that.
Well, it is a good time to start thinking about the tax year because there's a few things to take into consideration while you're getting ready for the end of the tax year. And Tony, you're right. Most people don't even think about it until they get their W-2 or their 1099 retirement forms. However, there are some things that you can do right now to go ahead and get ready so that you can make your tax year as best possible as it can be.
Wow. Okay. That's good to know. And I know that taxes seem to creep into every topic we talk about on the show. They're such a big part of your finances, and you want to make sure you're properly planning for taxes in general, but especially this time of year then, right?
Absolutely. And you're right. Taxes do creep into everything. Unfortunately, it's one of those things that you can't really get out of unless you're dead, and you're not dead yet, so you got to pay your taxes, but you can be tax efficient every chance you can.
Well, sure. People don't like to hear about taxes or talk about taxes, but the reason this show is so good is you want to know about things you can do to minimize that tax burden and save money. There are costly mistakes you can make with your taxes. So I like that. And you know what I always say is there are three things that are certain in life: death, taxes, and pizza. Well, pizza in my life is a certainty. That's for sure.
I like that. I like pizza.
Good. So where do you want to begin? What's something that we need to know about for year-end tax planning?
Well, so there's a few things that where we can be in. The first thing I want to begin is review your tax return from the previous year. There might be some things on there that you either missed or you just weren't familiar with. Now, I'm not expecting everyone to be a tax expert. So, what I mean by reviewing your tax return for last year is see what documents and statements actually came in. Now, if you're still working, this might just be as simple as a W 2 for you and your spouse if you're married. If you're already retired, you might have a number of forms that come in from different investment accounts. And so that's one thing that you can do is you can review your tax return to see, hey, what statements did I actually receive last year? And then do an inventory. Will you be receiving those same statements this year, or are some of those going to be different?
Ah, okay. And that makes sense. We can get deep in the weeds here with taxes and tax
Oh,
laws
yes.
and changes, but that's a really good point. And you want to utilize some strategies like that, don't you?
Yes. Yeah, it's easy to make a really quick checklist because so for instance, my mom, who's now retired, she receives a statement from the federal government pension from my dad. She receives her state pension from her work. She receives social security statement and she receives some retirement forms. So if we have a checklist of like, hey, we're expecting these things in for the end of the year, then it's easy to know when you have all of those, so then you can start your tax filing.
So the first thing to do is look back, right, at
Yes.
last year, review your statements from last year, and make sure, okay, maybe I missed this, or what can I do to carry over to this year? What mistakes did I make? What did I do right? And what can carry on into this year, right?
Absolutely. I know so many people are just so excited to file their taxes as quickly as possible.
Yeah.
But it could be that you might have missed something that year and you had to make an amended return because you received something late. So, by having a checklist or an inventory of what you actually are expecting will help out tremendously when you get ready to file your taxes.
That's really good. And my mom did taxes and bookkeeping for small businesses, and she always did our taxes, my wife and I's taxes, and my taxes, of course. And then after I was married, our taxes. And she had a tax prep checklist for us,
Hmm.
and it was tailored to us, right? She knew what we had going on, which helped. And I think, as a financial advisor, I know this is something that you and Anthony do. You work alongside your clients' tax professionals and you help people. Okay, you have this situation. Taxes are going to affect this. And people might not be thinking about that. And so that really goes into the calculations on what they do with their money, doesn't it?
Absolutely. Because some people, like myself, prefer to do their own taxes. I know how to do it. For me, it's easy. But if you were to ask my wife that same question, she would start crying possibly because she wouldn't want to do that. She doesn't know how to do that.
Yeah,
So some
I know
people
I
have
would
that tax
cry. I
professional.
don't want to do my own taxes. I need you and Anthony to help me. That's for sure.
Sure.
Yeah. Yeah, and a lot of people do their own taxes, but you can really make costly mistakes if you don't know what you're doing, can't you?
You can. It is, again, to me, because I have the knowledge, experience, and the education, it's as simple as reading the form. But to someone who's not familiar with what they're asking, it could be if you hit a keystroke wrong and say you actually paid in taxes of $3,000, but you said you paid in $30,000. Well, hey, you might get a big refund at the end of the year, but guess what? You got to pay that back if that doesn't come out right. So
Yeah.
it's stuff like that.
Yeah, yeah, there are a lot of things you need to watch out for. And we've got a lot more to discuss, but I want to take a quick break here to let our listeners know about the special offer that you and Anthony have. Now, before we do that, Michael, I want you to let our listeners know if they have questions about this or financial planning, or they want to get a second opinion on where they're at, how do they get a hold of you?
Sure, Tony. One of the easiest ways to get a hold of us is to visit our website at www.crescentcityretirement.com. Also, you can give us a call at our office at area code 504 828-2171.
All right, that sounds great. And now we're going to play the special offer from Anthony. Listeners, take note and please take advantage of this special offer.
You've been listening to our shows and advice on getting your finances in order and creating a retirement income plan that will last. Now is the time to take advantage of our special offer. This is Anthony Kangemi with Crescent City Retirement Group, and we're now offering our 3-step retirement planning process at no cost and a $100 gift card to the restaurant of your choice upon completion of the planning process. Call Crescent City Retirement Group within the next 20 minutes at 504-828-2171. That number again is 504-828-2171.
And welcome back to Retirement Talk. I'm your co-host, Tony Shore, and I'm here with our host today, Michael Feit. Now, Michael, it's great to have you on the show. Anthony's a busy guy. I'm glad you're filling in today, and I know we're going to be hearing more from you as you're a big part of the team there, you and Anthony working to help your clients out. And today we're talking about year-end tax preparation. You started the show off by talking about how you need to review last year. What statements come in? What do you need to do for this year? A good way to figure out what you need to do for this year is look at what happened last year. And I like that point you made. Now, what do you have for us next?
So the next thing is you need to know how you actually will be receiving your statements. A lot of companies are moving away from the printed statements. Therefore, they're requiring you or have the option to go on to their website to print those statements out. So one, as Tony said a while ago, you need to have that checklist of what you're expecting. And two, you need to know how to actually access your statements.
Yeah, that's huge. And if your company, most companies I know that are fair sized, if you work for a medium or large company, it's going to be on your human resources portal or your paychecks portal. So where you'll access that. And I haven't worked for a company that's mailed them out in quite a while. So the last few years, they don't mail them out. You have to go online. One good place to start, I would assume, to look for that is if you have a human resources department where you work and you have questions, you can ask them. I know that you guys have helped clients figure that out before if they need help with that. So that's important, but you'll need to talk to somebody at your office about where you can access your tax forms, right?
Absolutely. And depending on the type of investments that you have will depend on where you go to access your tax forms.
Yeah. Yeah. The 1099s, the W-2s, things like that. You got to have those. You can't miss them. Just because you say, well, I never got anything, that's no excuse. You have to figure it out, right?
Absolutely, which is another reason why you make that checklist first, and then you can find out where all of your statements are.
Yeah. Yeah. Great point. Great point. Some people still get mailed statements. I doubt very many, though, anymore, right?
Most of the time, if you receive a mailed statement, typically it's someone who's already drawing Social Security.
Sure.
Every now and then you'll have a firm that will mail you out something, but a lot of our annuity companies and investment companies do not mail something out. We have to access it online.
Oh, yeah, and that's a great point. I was thinking of the statements from your employer, but you're right. If you have investments and financial accounts, obviously, hopefully you do, the statements from money you've earned there, gains and losses, you'll need that for your taxes, and you'll need to know how to access those as well. And so, like you say, not all insurance companies or annuity firms or investment companies are sending out physical statements. A lot of them have gone online, haven't they?
They have. And most of the time you can find them on your actual account homepage under statements or documents, however it's listed. And it will say a year-end 1099 and then the type of form it is. So you can find it. But as you said, Tony, most companies aren't mailing these out anymore. So you need to know where to look to access these forms.
Yeah. Yeah, that's another great point. And I haven't really heard a lot of people talking about that point. But I'm glad you are. I'm sure some of our listeners may be wondering, or maybe they have a hard time finding those. I know if they have questions, they can give you or Anthony or somebody there in your office a call. Just call the office at Crescent City Retirement, and you'll help them out with that. So accessing your statements, keeping track of everything throughout the year, I would imagine is important, but really tracking it down this time of year, once fall hits, you gotta track all this stuff down, don't you?
Absolutely. Which actually is going to bring me to my next topic, and that is between itemized versus standard deductions.
I like the sound of deductions if it reduces my tax bill, Michael. But what do you mean itemized versus standard deductions?
Sure. So, what I mean by that is depending on how you file your taxes. So, I'll give an example. My wife and I file married filing jointly. And so, what that means is we will get an automatic standard deduction. It's based off of your age, either under age 65 or over age 65. If you have certain medical issues like blindness or disabled, you might get an additional bump. But most people file a standard deduction. So, give you an example. Our common example for our retiree clients, they're over 65 years old. They're filing as married filing jointly. Most of the time, they're going to choose the option for standard deduction. For 2023, that's going to apply if they're over 65 of about $30,700 of standard deduction. However, you do have the option to itemize your deductions if your itemized deductions add up to more than the standard deduction. And Tony, probably a question you're just now thinking, it was like, well, what are actual itemized deductions? And that's a great question, Tony. So some of those itemized deductions would be a charitable statement that you might have to your church or an organization, nonprofit organization, any property taxes that you paid, any mortgage interest that you paid, medical expenses over 7% of your take-home pay, and there's a few other things on there. Most of the time, people use standard deductions. But if you've had a lot of medical issues or if you've had a lot of generous giving throughout the year, you will need these receipts when you file your taxes, and that's why I'm mentioning it today.
Obviously, you can look at somebody's individual situation and say, hey, you have a tax advantage situation here that you could utilize or take advantage of or use this strategy. You got to do the math. You got to look at the big picture. And it's like I always say, Michael, what's the most important part of a puzzle? What's the most important piece? And people will say, oh, it's the last piece, or it's the corner pieces, or it's the side pieces. Nope, it's the box lid. That's the most important piece of a puzzle. And you know why? Is because it's got the big picture. If you're sitting in front of a 1,000-piece puzzle and you don't have that big picture of what it's supposed to look like, it is going to be very hard and complicated for you to put that together if you can ever get it together. So that's where you come in as a financial advisor, and you're a holistic advisor. You look at the big picture, right?
Absolutely. And Tony, I like that so much. I'm going to start using that.
Yeah, that's a good one. The most important piece of a puzzle is a box lid because the picture is the most important part, in my opinion. So, nope, I think that's great. Well, this has been a great discussion so far. We should probably take another quick break here, but before we do, let our listeners know how they can get a hold of you.
Sure, Tony. The best way to get a hold of us is to visit our website at www.crescentcityretirement.com, or you can call us by phone at 504-828-2171.
All right, listeners, stay tuned. We're going to be right back with more of Retirement Keys and our host, Michael Feit, right after this.
You've been listening to our shows and advice on getting your finances in order and creating a retirement income plan that will last. Now is the time to take advantage of our special offer. This is Anthony Congemi of Crescent City Retirement Group, and we're now offering a complimentary gourmet dinner and retirement planning workshop, The 5 Keys to a Stress-Free Retirement. This is one workshop you won't want to miss. Call in the next 20 minutes for this no-cost offer. Seating is limited. Call Crescent City Retirement Group within the next 20 minutes at 504-828-2171. That number again is 504-828-2171.
Welcome back to Retirement Keys. I'm your co-host, Tony Shore. I'm here with our host, the man with the plan. Today is Michael Feit. Michael, great to be here with you. We're talking about year-end tax preparation. So what do you have for us next on this topic?
So the next thing I have for you, Tony, and this is the second to last point I have, is you need to know what you can do to best benefit your tax strategy. What I mean by that is if you're working, hopefully you're putting into a 401k plan or an employer-sponsored plan. This will give you an automatic reduction on your taxes every year, and it helps you save for retirement. If you don't have an employer-sponsored plan, you can still get a tax deduction on your taxes by making a contribution to a traditional IRA. And you can do it for you and your spouse. Depending on how old you are, if you're under age 50, it's going to be $6,500 per person this year, as long as you have earned income. If you're over 50, you get an extra $1,000 catch-up provision. So that's one thing that you could do to help benefit your taxes. If you want to meet with us, we could discuss whether it'd be a better option for you to do a traditional IRA or contribute to a Roth IRA that will grow tax-free. But we would need to evaluate what your current tax standing is to best determine what contribution you should make.
Okay. Yeah, and you really want to take advantage of those tax advantage plans. A lot of people have them, retirement plans where the money goes in tax-free, and that's money that doesn't hit your taxable income. And that can help you depending on what kind of tax situation you're in, is what you're saying. Is that correct?
Absolutely. It really just breaks into your tax bracket. Now, this could be a conversation for a different day, but just to give you a quick summary, if the idea behind the tax deferral plan, or in this case, the traditional IRA or the 401k, is to keep your income that's currently in a higher tax bracket to defer to a lower tax bracket once you retire. So that's one of the reasons to do this taxable traditional IRA contribution. However, if your tax bracket is already one of the lower end tax brackets, such as the 10% or the 12% tax bracket, then it may not be beneficial for you to put money into a traditional IRA. It might be more beneficial for you to put money into a Roth IRA. But that's something that you can come in and talk to us about.
Sure. Yeah, that makes sense. And I think that's great. So what's the final point you want to talk about when it comes to year-end tax preparation?
Thank you, Tony. The final point I want to talk about when it comes to year-end tax preparation is when is the best time to file. Now, the earliest you can file is right after January 31st. The IRS requires all businesses to have all of their statements ready by January 31st. So if you're eager and you want to file taxes right away, make sure you've gone over this prep list. Make sure you checked your inventory. Do you have everything? Do you have all of your statements? If so, how do you access those statements? Do you know if you're going to file itemized or standard deductions? So once you have all of those things in mind and ready at hand, then you can determine when is the best time to file. For most filers, they have to file on or before the tax deadline, which usually falls around April 15th of each year. However, if you have a small business or if you have forms that come in later than that, you will need to file an extension. But if you are projected to owe any tax liability, you will still need to pay that money before the tax deadline of April 15th or whatever date it falls on this year.
Yeah, that sounds like a really great strategy that you need to pay attention to, right?
Absolutely. Most people, if it's just a standard W-2 and a few other documents, most people will file between March and April, won't be a problem. But sometimes that tax date can slip up on you and you'll need to file an extension. So that's where, as you said earlier, Tony, working with a tax professional can help keep you on track with what you need to do there.
Yeah. Yeah. And I think that's hugely important. Well, this has been a great discussion. I mean, we've covered a lot already today, And I know there are other things before the year end. I know there's qualified charitable contributions, right? Isn't that what they're called?
Yes, you can do a qualified charitable distribution.
Distribution, yes. Yes, that's what I meant. A QCD as it's known.
Absolutely. And I'd be more than happy to talk with any of our clients or potential clients if they want to come on in.
All right. Well, that sounds great, Michael. Great show today. We barely missed Anthony. I hate to say it, but you did a good job filling in today. And hopefully we'll see and hear more of you on the show each week. But Michael, great topic. One more time before we go, let our listeners know how they can get a hold of you.
Sure. And thank you for your time, Tony. I really appreciate it. The best way to get in touch with us is either through our website at www.crescentcityretirement.com or by phone at 504-828-2171.
All right. Thank you so much, Michael. And listeners, that does it for today's episode of Retirement Keys with our host, Michael Fite. Thank you for listening to Retirement Keys. Don't pay too much for taxes or retire without a sound income plan. For more information, please contact Anthony Congemi at Crescent City Retirement Group. Call 504-828-2171 or visit the website at crescentcityretirement.com.
All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.